Welcome to Wall Street Confidential on TheStreet.com TV. With the U.S. economy in a continuously ongoing decline, so it seems.
Right.
Jim, one of the questions I think a lot of people want to know is, where are our inventory builds?
Okay, it is rather remarkable that with the slowdown that we have, that at no point does it seem like we have enough. I mean, it's interesting to see that this morning there's a end of a shortage in nickel apparently, but almost all of the metals are in short supply, and a lot of that has to do with China. But you would think that we'd be big enough economy here that our incredible housing slowdown would have translated into much lower commodity prices somewhere along the line. Now, we don't have a decline in commercial real estate, which again is incredible. Like, where is that decline? That uses a lot of steel, that uses copper. But one of the things that has just bedeviled the Fed here is that typically at a certain point we would get the slowdown impacting the commodities. And once those are impacted, then the Fed doesn't feel like it's done the wrong thing. The market declined when the Fed looked like it was done. And then when the commodities went up again, including oil, everybody sold the market off. Now, it's interesting. Anytime now that we get the commodities down, we get a rally. And we get that because the Fed's done, or at least said it's done. I mean, they wish that, they said they're done so many times. They've been a real part of the problem, although I like the direction that they took rates. But we should have had the inventory build right now, which is precisely why it has become so difficult to navigate the market. Like, we read about how gasoline and the American travelers declined 4% year over year, but it means nothing to gasoline. And again, that has to do with the fact that we're not the marginal buyer. And none of these other economies are slowing down at all. Like, India's not slowing down, and China's not slowing down. And that's all. What we're seeing away from the United States is the progress of countries becoming more middle class. We have not been able to take a break long enough in the economy to be able to find more oil, dig more copper, put together more steel. That's unique, and it's why this market has been a terrible market, because we need to see either commodities come down and a restart in the cycle, which we haven't gotten, or we need to see housing go back up and an end to the financial mess, so that even though gasoline's higher, at least the other big asset we have besides our ability to consume is our house going up in value. So you got to get one or the other. And right now, we clearly are not getting the inventory break we want.
And if we get one of those two things, then we'll get the break that we need.
Well, I mean, and you'll see like a day like today, it looks like we got the break. And so then people go buy a lot of different stocks that have been knocked down. The true test is that as long as commodities go higher, people want to sell retail. And it's knee-jerk. Commodities go lower, buy retail. And is that right? Doesn't matter. It's what's happening.
And just as a quick side note, now you mentioned the Fed and saying it's done. Should we be leaving the door open to more rate cuts?
You never want to say you're done. I mean, the Fed has made this mistake so many times. Every time they make it, the market goes down, then they have to take more action. Right. If they simply issued no statement, we'd be much better off.
Okay, thank you very much, Jim. Stay tuned for more of Wall Street Confidential.